Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning. Welcome to Financial Issues. I'm your host, Shana. Thanks for tuning in today. Financial Issues. We are a ministry that helps to educate people about financial issues from a biblical worldview. We hope that you're a partner with us, and if you are a partner, you should be in the habit or get in the habit of checking our website every Monday evening, maybe Tuesday morning. That's when we tend to update our commentary that we share with just the partners. So if you're a partner, we hope that you're in the habit of doing that, especially if you can't tune in to every single episode. That's a great way to stay informed of our train of thought, what we're thinking, and how that impacts our strategy, which is a biblically responsible strategy. If you're not a partner, we invite you to become one. For just $132 a year, you can partner with us. Let's get started today with our stewardship verse of the day. It comes from Mark 8:36. For what does it profit a man to gain the whole world and forfeit his soul? Well, as a financial professional who looks at businesses every day and evaluates businesses and their profits and losses, profit is something that is front and center for me on a daily basis. It's a topic that I deal with quite regularly. So profit is defined as the financial benefit realized after all costs have been subtracted from revenue. So one of the main things that a good analyst will pay a lot of attention to is revenue. That's money flowing in. Expenses are also equally important because a business cannot operate indefinitely at a loss. Eventually, once it has no money and it can't borrow anymore, it goes bankrupt and ceases to exist. So, sure, businesses can borrow money as long as they are thought of to be reasonably capable of servicing their debt and paying it back when it's promised. But, here on this earth, we are here on borrowed time, and we very quickly accumulate an immeasurable debt that we can never pay back because of our sin. The kind of debt can only be paid with death, right? It says the penalty for sin is death. We live in a world that we didn't create, with things that don't actually belong to us and rules that we didn't make. So at the end of that borrowed time, we will give an accounting. You see all this financial terminology? Tell me, God doesn't speak to us through financial things that we understand. Yeah. So we will have to give an accounting to the one who made it all, owns it all, and made all the rules. So at the end of this life, we must have a positive profit. We must have the right answer to get into heaven. But here's the kicker. We can never, no matter how many good or positive things that we do in this life, come up with enough to enter heaven on our own merit. There was only one who could do that. And thank God that He allows us to turn in Jesus's profit and loss statement instead of our own on accounting day. But it will cost us. We will have to lay down our lives and accept Jesus as Lord and Savior and allow Him to be the CEO of our lives. So we just encourage you, if you've never made that decision, the most important information can be found on our website under the Resources tab under Do You Want to Know God? Seth, what do you think?
Yeah, it's right on, Shana. Easier said than done, I think, for sure. But yeah, seeing the fact that these two things that Jesus mentions here, gaining the whole world and forfeiting your soul, are related to each other, that the more the world you gain, it's sad, but the more opportunity it becomes to forfeit our souls. We need to gain Christ. We need more of Christ. And oftentimes that means having less of the world. It doesn't necessarily mean that it's a guarantee of, like poverty all the time, or even a guarantee of hardship all the time, but it is a guarantee of hardship at some points for sure. Mm-hmm. But the cost is worth it, Shana. That's my encouragement for our listeners. If you can count the cost and count it to be worth it, to be willing to forsake everything here but gain Christ, man, it's worth it. It really is.
Amen.
So, and Shanna, I did want to just mention this also when we're talking about funding the light and, stewarding the gospel as well. I can't help but think of our friends at Preborn and the great work that they're doing, especially this month of February, it being, Valentine's month, talking about just that intimate connection between a mother and her baby. Just wanted to remind you all of the great work Preborn's doing. Shanna, did you know they had a record year last year? They saved over 70,000 babies.
That's amazing.
That was in huge part to the listeners here.
Yep. Our listeners were a big part of that.
So. Absolutely. So please do consider visiting.
Encourage you and pray about what you might give to this year's campaign as well.
Yeah, absolutely. Well, Shana, we got a couple questions to get to if you'd like.
Let's do it.
Yeah, you want to start with Cecilia? So Cecilia is a partner, and she calls into the show from time to time. She had called into the show previously and had asked a question, and so the question is this. She says, I'm 73, I'm a partner for the last 5 years. Just have a discussion question mainly on cumulative versus non-cumulative preferred stock positions. Shana, could you elaborate on that a little bit? I'm trying to make a decision about what to fill up my portfolio with for fixed income. Really appreciate you guys. Have a blessed day. What do you think for Cecilia?
Yep, great. So preferred stocks are they are equity positions, but they work and act a lot like fixed income positions. So one way that a company can raise money is to issue preferred stock, and when they do that, they issue the stock at a certain par rate, which is around $25, and they pay they offer to pay a fixed dividend on that initial par rate. The difference between cumulative and non-cumulative is that when a company issues a cumulative preferred stock, they are obligated to pay all dividends, and if they miss dividend payments, they have to make up the back dividend payments going forward. In a non-cumulative preferred, if a company skips a dividend payment, it can be permanently forfeited. It does not accumulate. So that's the cumulative versus non-cumulative part of the strategy. So obviously the cumulative would be preferable. They're just, they're a lot harder to find. So, when we're looking at preferreds, we focus on companies that have a really great track record of paying the dividends that they've promised in the preferred on their preferred stocks, but of course that's no guarantee that they will continue to do that in the future. Even any company that has a cumulative preferred, it's no guarantee that they won't fail in business and actually go bankrupt. You just have a little bit higher position if the company is liquidated than you do in a common stock type of position.
Very good, Shana. Thank you, Bob. Up next here, age 70. He's holding FP31 right now. On the sell list, he says, my current yield on it is 5.83% after a dollar cost average. If I sell it at today's price and I buy FP42, it would take approximately 4 years at the new interest rate to recoup the loss I would incur on selling FP31. Do you have any idea how soon FP42 might be called? I have no idea if this is a good trade since I don't know if FP42 or FP50 might be called within less than 4 years. 70 years old. What would you have for Bob there, Shana?
Yeah. So the reason that we issued the sells and are suggesting a replacement is just because you can improve your yield. Even though you're selling at a loss, the money that you have left is still going to generate at least the same or higher income than you were getting on the other one. So that particular preferred, we don't know when it'll be called. Most preferreds are actually perpetually callable, and many of them have already reached their initial call date. So, we do review the preferreds on our list at least once a month, and, we would issue guidance if we saw, something happening there.
Nice, Shana. Last one here, we have Pete from Seattle, 64 years old. He uses the age 45 to 55 model and tried to be diversified within sectors and is wondering, is there a significant energy sector overlap between E62, E65, and E67? Focus is not identical, but I see some overlap in natural gas. Are they different enough to be in separate energy subsectors? And if not, which should I sell? I'll be sending an inquiry about the materials sector shortly, so we can be on the lookout for that.
Yeah, so, what I would do is I would just read the descriptions. I mean, the companies are different enough. I like all three of them. I don't think that I would sell any of them, but I wouldn't add any more that have a focus on natural gas. I would look at the buy list and maybe, if you're light in that sector, and that is one sector that will probably be slightly increased for Pete's category. So, maybe you don't do it yet, but you can add in, next time that you're adding to your energy sector, because I would think that you would have more than just three companies in the energy sector, but maybe look at broadening that out just a little bit.
Awesome. Good stuff, Shana. I'm looking forward to Jason coming on here. It's going to be fun.
Yep. Folks, stay tuned. I've got Jason MacDowell, my friend and colleague, that's coming on next, and we're going to be talking about fear and greed. So, interesting stuff. Stay tuned. If you're listening on an outlet that only carries the short version of the show, well, you can keep listening because you're going to hear the next half. But after that, you're going to have our phone app or know where to get the show on the long format. Stay tuned. We'll be back with more financial issues.
How is Timothy Plan continuing to lead the fight as you guys now enter your fourth decade of leading this fight of biblically responsible investing?
We've been too silent for too long, and we can no longer be silent. You stand up, like Ronald Reagan said, we're only one generation away from losing all of our liberty. Yeah. It has to be fought for. I wish it didn't. And you can fight for it. You don't need guns and ammunition and that. You can fight for it, especially with your dollars, because it's always about the money. And when the money starts impacting people, they start paying attention. When we launched this, they said it couldn't be done, but here we are 30 years later. They said you couldn't get competitive returns, but here we are.
What a tremendous testament of God's grace.
Go to financialissues.org/Timothy Plans to learn more about Timothy Plan.
In a time when children are facing unprecedented challenges, the gospel stands as the greatest source of hope. At Crossroads Kids Club, we have the incredible opportunity to bring the message of Jesus into public schools nationwide. Join us in sharing the life-changing hope of the gospel with the next generation. The need is urgent, but God's love is powerful. Together, we can offer Christ's love to children who are longing for it. To join us, visit reachourschools.com. That's reachourschools.com.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. On top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn.
Then they sat me down. If you were to die today, do you think you would go to heaven? And I was like, no. Keeping the child was my first stepping stone, and ever since then, God has cleaned me up from the inside out.
Help support women in need. Go to preborn.com/FISM.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only, and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it, and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues. Thanks for sticking with us here. Well, often I talk about what drives the markets, because we talk about the markets a lot on Financial Issues, which is fitting since we give our listeners or our partners a biblically responsible investment strategy. We help enable you to be your own portfolio manager. So we talk a lot about the markets. Long term or short term, what drives the markets is emotion. It's fear and it's greed. We saw this last week. Fear started out driving the markets early in the week as all of that data came out about DeepSeek and the AI race and all of those things. We saw the market react very, very negatively. I think by the end of the week, we did come to believe that it was a little bit overdone. Also, in the short term, the other emotion that drives the markets the other way is greed. And we saw that in the week before last as Trump took office and all of everyone got excited about all of the things that the Trump administration was doing, and we saw the markets go up. So short term, what drives the market is fear and greed. Long term, the market is pushed higher by real things like companies, real companies with real sales, real earnings. And those are the things that we look at. We have a long-term strategy. So I've got my friend and colleague, Jason MacDowell, back here to talk with us about some of the things, the fear and the greed that's been happening in the market. You know, Jason, there's so much good news that has come out since Trump took office, but let's talk about some of the not so positive headlines that we've seen, like top Federal Reserve official warns of inflation risk after Trump takes power. Wall Street ends lower as inflation fear mounts. Bond market is sounding uneasy over Trump inflation. So what's your take on some of these headlines?
Well, at this point, since 2016, we as Americans should expect that the mainstream media is going to position Trump in the most negative light while taking every shot they can at him, and that's the pun intended. The market has gone from pricing 4 to 2, now to 1 rate cuts in 2025. So that's just kind of where they're sitting with just the rate cut as far as a positive reaction to what J Powell says. Markets run on fear, and fear is a very strong emotion, of course, and by nature, we as humans are risk adverse, and that pours over into financial markets. The CFA Institute highlighted that between 1990 and 2024, if my math is right, that's about 34 years, that's a pretty good take there, there was a 4% higher expected market volatility than actually realized. So I think about that from people that are 60, that would be this 34-year study would be like from 60 to 94. That's an entire retirement life cycle there. And it was the volatility expectations were just 4% higher. So that tells us a lot about what fear does to people and the behavior. We can use 2016 when Trump took office amid the Fed rate hike. Yields shot up following Trump's election. Then by March to September of 2017, yields declined when markets recalibrated. Seems to be the same now, but during the Fed rate cuts. So one economist has said this could be, from what the Fed is doing, is a hawkish dovishness, which is when you act dovish but talk hawkish. So it kind of gives J Powell some breathing room to make some decisions based off of current events, I guess you could say. It gives them more flexibility, it kind of keeps them in a neutral stance and make the decisions that are opportunistic for his position, in my opinion, only here. And this economist that I was just reading from here also believes the Fed will just continue to do the rate cut. So not necessarily one, but maybe there's more than that when the opportunity sees fit for J Powell.
Yeah, a couple of things about what you said. You know, there's also that apolitical nature of the Fed. You know, perhaps you really do have a political agenda if you are, and I'm speaking of Powell here, if you are doing the opposite of what you are saying. So, you know, if I were Powell and I cared more about my own economics and job security than I did about the rest of the U.S. economy, not saying that that's the case, not accusing J Powell of that, but, you know, I wouldn't want to rock the economic boat by stalling out the rate cut cycle before an election. And, you know, I mean, you know, core PCE, which is the Fed's preferred measure of inflation, bottomed from an annual rate of increase at about 2.6% in June of last year, moved higher to 2.8% for the next 3 months. So why, when inflation is moving higher, would you start a rate cutting cycle, especially with 50 basis points, which is kind of unheard of, and that happened in September, when inflation is not even yet at the 2% target and moving up. You know, the other thing that you mentioned is that study about the expectations being 4% higher for market volatility. I mean, I can confirm that. I've been in private practice now for over 20 years, and it seems like every meeting that I have with a client, you know, I always start out asking them, you know, what's on your mind? You know, what do you want to have answered during this meeting? And it's always, no matter what's happening in the market, there are always worries that clients have that need to be addressed. There's always, you know, they're always worried about the next leg down, or, you know, what could happen. So I think that's a really valid point, and really interesting that you bring that up. And what about the tariffs? You know, there's all this talk about tariffs reigniting inflation. You know, the smoldering embers of inflation have not really been even extinguished yet. We're not even at that 2% target because, in my opinion, Congress has not fully committed to shutting down the smoking hot printing press, where they're printing all of the money to fund all of the spending that they're doing. What would you say about that?
Yeah, I mean, it's inflationary policy fears that are coming out of the MSM there. The MSM would like listeners to believe that tariffs will impact inflation, but it's believed to be overstated. As Trump is in office, there's a softer tone to the tariffs. He is adding Mexico and Canada's tariffs that we're getting new information of what's being confirmed, basically. So it's constantly changing right now. So it's a moving target of what Trump's really going to do and what he's talked about. And we want to wait as things come through. I know he's changed some views on what he's going to do with China, what type of tariffs. I mean, we'd like to open those up and see how those impact. So we have to wait on a lot of them. But the International Monetary Fund has done a working paper called The Macroeconomic Consequences of Import Tariffs and Trade Policy Uncertainty, which a working paper just allows for comments, has some quantifiable data in there, improving their points. But what it does is it highlights tariffs impact trade negatively, but the but is the impact on inflation is actually minor or nominal due to the household adjustments of prices and discretionary spending. So as the mainstream media wants to blame tariffs for it, we come back to the same thing we talk about all the time is government spending, right? So there's also the External Revenue Service that Trump has talked about adding another 3-letter agency, I guess, is my question. Is he adding more agencies when we were talking about hopefully reducing those?
Hopefully he's replacing some.
Yeah, replacing some. They're doing a lot right now. So we're going to try to keep up with some things, but we'll wait until things settle and then we can talk about it later. But this ERS, if you will, was going to be collecting the tariffs and duties from foreign sources, which is funny because there actually already is an existence of that. It's the U.S. Customs that does it. So maybe this one is going to work with them, or he hires all the IRS agents that were newly hired to work that one too, which is really funny.
They're not going to have to pick the fruit.
Yeah, actually, and he's recently stated that he's considering moving the 90,000 new hires to the IRS, either kind of letting them go with a severance, which I've seen them do a lot, especially the Doge team, is they're adding a severance period of time for them to continue to get paid throughout the year, I believe, but they're also giving it an option to move to another probably agency. So another part of the executive branch is what I believe is what's happening. So they're giving them a way out or a choice. But he's thinking about moving the 90,000 IRS new hires to the U.S.-Mexico border, which I thought was really funny. And that goes to your point there about picking the fruit. And I just look at it as now, I guess most of the IRS agents are armed now, which is technically the criminal investigation unit. So are they all that type? Or, that's a lot of people, 90,000 people. But right. I thought that was pretty funny what he's doing.
So then we throw AI into the mix. Once AI gets fully adopted, there are expected to be gains in productivity for companies that successfully integrated into their business models. Robots are supposed to take everyone's jobs, by the way. So, Jason, what's your latest take on what's your take on the latest AI developments?
We'll unpack AI and probably in a bigger manner as time goes on, but specifically from an economist standpoint, one economist believes that AI could lead to deflation. I'm not going to hold my breath on that, but he states that AI will dramatically reduce prices, bringing in deflation because of the difference in the internet boom in the 90s was that it was quantitative, meaning that it got better but not cheaper. But with AI, it could actually run a factory or chicken farm, right? It could actually run something at the bigger industrial level. But yes, everyone would scream that removes certain jobs, but there's some efficiency that it would apply there that could actually affect deflation. But then I always ask, well, we got to get Congress to quit spending money. We got to quit the government from spending money. And so there, I won't hold my breath. But my hope for AI is that it can read the 25,000-page tax bill that could come about and just give me some points accurately on it so that we can read it and understand it before it gets voted on. I want that transparency. So that's where my hope is with that, for being very efficient, is breaking down Congress so that they can have clean bills.
Hopefully Congress is reading it themselves too, though, because AI I find is wrong a lot.
Absolutely. And then, of course, the market volatility, I think, is one of the biggest fears. Is when that happens, people start asking questions, things dropped. What can you tell me? Is there bad news? What's going on? Our buy list has those windows. The partnership is very important. There was the recent global sell-off of the tech stocks due to Chinese DeepSeek AI. And there's a lot to unpack with that one, too. But the NASDAQ dropped about 3.1% during that time. And at this point, it's done a slow recovery. And that's kind of what happens with why we're long-term holders is there's always a quick sell-off, but then there's a longer time recovery. So in my mind, psychologically, I would say the best possible way to avoid those problems is being a long-term investor. If we have long-term, short-term volatility, doesn't matter. We're always looking for that 8 to 10 year, right? And that's what we tell our clients. Hey, it doesn't matter what just happened in 1 week because you would have already forgotten about it if it recovered in about 2 months. So,
yeah. You know what? You're right about that. And I think, my team, we listen to the news of the day. We listen to the plans of the new administration. We listen to the headlines. We listen, I like to listen to both sides of the story. We have opinions about how some of the things that are happening with the Trump administration can really change the macroeconomic landscape. But at the end of the day, we work with the knowledge that we have. We look at real things like earnings and sales of real companies and choose companies that we think have a great chance for long-term success. And more importantly, they don't violate our Christian values by funding darkness. Well, folks, if you're listening on a station that only carries the 30-minute version of the show, we have to bid you a farewell. If you want to catch the full show, go to financialissues.org/live or download our phone app. For everyone else, stay tuned. We'll be back with more Financial Issues.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
And we're the Gen X.
And we're Samaritan members.
One of the emphases of preborn has been ultrasound in two ways. An ultrasound machine if a pregnancy clinic doesn't have one, and then an ultrasound session, which we underwrite hundreds of thousands of those. We've seen over and over again the dramatic results that when a woman encounters her baby for the first time and hears that heartbeat, she realizes the magnitude of what's happening here, that there is somebody else, that's her baby. So this is why preborn pushes out ultrasound as much as we possibly can. Preborn has seen over 200,000 babies saved, over 59,000 people come to Christ, populating earth and eternity, life for this life and life forever. Save the baby's life, but save the mother's life so that she can lead that baby to Christ. If we're bringing people into this world and the mother doesn't receive Christ and the child is born and the child lives its life and doesn't receive Christ, this is not a good end. And so we have to have the gospel as part and parcel and really the heartbeat of what preborn is.
What separates Crossroads Kids Club from other ministries to reach school-age children? What sets you guys apart?
First of all is our connection with local churches. We mobilize, equip, train, support local church partners. We're right inside the schools. There's a number of ministries that try to serve public school children outside of the school, but we're able to be right there on the campus. Another key thing is just our values. Our highest value is actually relationships. And so we're not a ministry that's driven by a lot of fancy technology or flashy stuff, but rather getting adults who love Jesus and who love kids to sit on the floor with a group of kids, to listen to them, to love them. So I would say the relational emphasis and the simplicity of the model is actually something that makes Crossroads special as well.
Help reach kids with the hope of the gospel. Visit reachOurschools.com.
Welcome back to Financial Issues, everybody. Good to be here with you. I'll be taking you the rest of the way. I hope you enjoyed that segment with Shana and Jason. Always good to have Jason on the program. And Sam Case with me today as well. Hi, Sam.
Hey, how you doing?
Good to see you. Excited for another week. We got some fun things to talk about today. We'll get to some of that later on in the show. We'll be talking about... well, I'll just leave you on a cliffhanger. How's that sound?
Suspense.
That's right. You'll just have to get there. That's exactly right. For now, let's take a look real quickly at what the markets did on Friday. A pretty chaotic week, of course, as you heard Shana and Jason just talk about with DeepSeek and everything going on there. They looked to finish the week in positive territory. They opened by hitting that mark. By midday, tech-heavy NASDAQ is leading the charge. The S&P 500 following, kind of not far behind. The Dow Jones is at the flat line. It appeared that the indices were going to make that comeback until late afternoon when the markets turned negative because investors became a little skittish from the news that the Trump administration would indeed announce tariffs beginning over the weekend, which they did end up following up on, and we'll get to that in just a moment. But by Friday's closing bell, the markets did not like that at all, and so they finished in moderately negative territory. The Dow Jones finished down 0.75%. The S&P 500 was 0.5% negative, and the NASDAQ was down 0.25%. Now, before we get to the tariffs, it was still a winning month for 2025, folks. It's a bit of a surprise with how chaotic the last week was with DeepSeek and all the other things going on. But in the first month of 2025, despite a few bumps and bruises, all three indices achieved a winning month, and some of them pretty strongly. So the Dow Jones was up almost 5 percentage points for the month. The S&P 500 was around 2.7, and then the NASDAQ finished 1.6% positive. I can't help but think how further positive the NASDAQ might have gone if it weren't for the DeepSeek drama at the beginning of last week. But at any rate, still a winning week for the markets in the first month of 2025. All right, let's get to those tariffs now. Sam, what can you tell us about this? Obviously, this was weekend news. They came out on Saturday. Trump signed this order. It was expected, so not too much of a surprise. But what do you have for us?
So it's tariff time, Seth. Yep. As Trump has repeatedly said, it is his favorite word, tariff. He says it's the best word in the English language. So he's making good on that promise, issuing 25% tariffs for Canada and Mexico, as well as a 10% tariff for China. And I do have a clip of him talking about that over the weekend. Here's the president.
We subsidize Canada by the tune of about $200 billion a year. And for what? What do we get out of it? We don't get anything out of it. I love the people of Canada. I disagree with the leadership of Canada. And something's going to happen there. But if they want to play the game, I don't mind. We can play the game all they want. Mexico, we've had very good talks with them. And this is retaliatory. This is retaliatory to a certain extent. Millions of people flowed into our country through Mexico and Canada, and we're not going to allow that.
So, Seth, what you hear there's a couple reasons for these tariffs. One of them, of course, is economic, to rebalance a couple of issues that Trump has with our trade agreements with Mexico and Canada. But the larger issue here is really meant to be leverage to close the border, both at the southern the southern area with Mexico as well as the northern border with Canada. So I think that's mainly what he wants to get out of this. In response, Mexico and Canada have issued their own tariffs. Trump is meeting with Canadian Prime Minister Justin Trudeau today to talk about what they're going to do about this. So I don't think we're probably going to see this for too long with Canada. I don't think they can withstand this level of tariffs for too long. So I wouldn't be surprised if they come to a deal pretty quickly.
For sure, for sure. Now, China, on the other hand, maybe that could be a little bit longer, at being our mortal enemy, of course.
I would not be, I'd be pretty surprised if those go away really ever under President Trump, because this is a much longer term issue with China.
Yeah, absolutely. So, folks, to be sure, tomorrow morning, hopefully we'll have a little more from you for you on that meeting between Trump and Trudeau. I suspect it'll be an interesting one, Sam. I can't imagine it wouldn't be, with those two personalities coming together.
And you can, even if they do make a deal, I don't know if they'll make one at this time. I bet Trudeau is going to want to try to save face and make it look like Canada has come out on the winning side of things. Knowing Trump, he'll try to come to some sort of agreement that will benefit both parties, make both sides happy, but ultimately be in the U.S.'s favor in the end. So we'll end up and just have to wait and see what happens there.
Yeah, I agree with that, Sam. I think there's also, Trump has a little bit of the advantage just from a situational standpoint because Trudeau's already on his heels. His approval rating in Canada has dropped like a rock.
Unpopular.
And so it'll be interesting to see that for sure. But thank you for that, Sam. No, it's good stuff. Hey, folks, quickly, what to expect this week in the economy. So Shana mentioned this on Friday. This is jobs week. So we got a lot of jobs numbers coming out. Today, we get the ISM manufacturing for January. That will break after the show. Tomorrow, same thing after the show, we'll get JOLTS. So that's the job openings for December. Wednesday, we get ISM services for January. All these numbers, by the way, those first three I mentioned, break after the show. So we'll talk about them, Lord willing, the following show. Thursday, we get initial jobless claims as usual for last week. And then Friday is kind of the big one. You got non-farm payrolls and the unemployment rate, both for January as well. And then consumer sentiment, of course, comes out as the show ends. Meanwhile, earnings reports last week. Let's just take a look at some last week ones. So ExxonMobil reported last week. They beat on earnings per share. They did not beat on revenue, though. And then Chevron missed on earnings per share, but beat on revenue. So a couple of oil companies reporting there this week. It's not a huge week, but there's a couple big names to keep an eye on. We get Palantir, Tyson, and not much else today. Tomorrow, we get Alphabet. So that's, of course, the parent company for Google. We also get Toyota and Pfizer on Tuesday. Wednesday, we get Alibaba, Walt Disney, and some others. Thursday is probably cohesively, I'd say, the biggest day because you got Amazon, Eli Lilly, ConocoPhillips, and then some other ones also. Not much to report, though, on Friday. So earnings season continues to march on for quarter 4 of 2024. All right, Sam, we got a couple of interesting comments here. I'd love to get to one of these, at least before the ag report here, if we have time. Let's get to Eddie in Tennessee from the chat.
Yes, sir, Seth. So Eddie is from Pinson, Tennessee, and he says, do you think the effect of the tariffs will cause Americans to view Trump negatively?
Hey, Eddie, that's a good question, brother. I would think probably not. And here's why. The Americans who already view Trump negatively, Trump could bring about world peace and be the greatest president ever, and they would still view him negatively. The ones who view him positively, I think, understand that Trump is trying to play the long game here. And Sam, feel free to chime in at any point with this as well. I think they understand that there's going to be some bumps and bruises along the way. You're trying to clean up a big mess here, a big mess. And so I think that the Americans who continue to view Trump positively, I think they'll do so. I think they're trusting his plan as a businessman. I think all that stuff. Those, again, if we're talking about the ones who already view him negatively, I think they'll continue to view him negatively because I'm just not sure there's anything that Trump could do to turn them around. Now, he was able to turn some people around, evidently, from the previous election because more people voted for him, of course, assuming that the previous election was fair, which I know is a big question. But yeah, I mean, I feel like the effects of these tariffs, I don't suspect that they would cause Americans to view Trump negatively. I will say they are causing the markets to react negatively. The markets certainly don't like it. I failed to mention that the markets are open now, and each of the major indices down over a full percentage point. So the Dow Jones is down over 1%, right about 1.13. The S&P 500 is down about 1 0.4%, and the NASDAQ is creeping up to 2% downwards. So the markets don't seem to like it, but I do think that Americans as a whole, I don't really feel like this would change their view of Trump all that much.
I would think the only way that this would change people's opinions of Trump is that if this does get out of hand and starts issuing tariffs left and right and gets into some protracted trade wars with other countries, which I don't think he's going to do, but that is a risk.
It is.
If these tariffs really start to pile up and there's no end in sight.
For sure. And so, Sam, you had brought up earlier, it is a good sign to know that Trump is meeting with Trudeau today, so hopefully they can work something out there, definitely. But no, I agree with that completely. If it were to get out of hand, you might see the temperature begin to change there. But, Eddie, it's a good question there, man, and I do appreciate that. Folks, we do have the Ag Report coming up in just a moment here, so you hear from Craig Haugaard, our farmers and ranchers. Always appreciate all of you listening to the show, and of course we appreciate Craig bringing us the Ag Report as well. We got more financial issues right after this.
This is Craig Haugaard with your Financial Issues Ag Update for February 3rd. The grain markets were on edge Friday as they contemplated the looming Trump tariffs to Mexico, Canada, and China. Of course, those countries are all big agricultural trading partners with the U.S., so tariffs could have a pretty negative impact on grain prices. At the closing bell, March corn was 8 1/4 cents lower at $4.82 cents per bushel. Soybeans were a tug of war between traders who are fearful of tariffs and those who are looking at a hot and dry forecast for Argentina. We traded both sides, but ultimately March beans closed 2 cents lower at $10.42. Wheat struggled, with traders pointing to the improved weather conditions in the U.S. winter wheat belt, as well as in Russia, as reasons for the sell-off. Minneapolis March wheat was 4 3/4 cents lower at $6.15.5. Kansas City dropped by 9 cents, closing at $5.79 1/4, and Chicago was 7 cents lower at $5.59.5. Cotton futures continue to be pressured by fund selling. Funds now have the largest short position ever recorded in cotton, and as a result, cotton futures made a new life of contract low on Friday. March futures were down 39 points at the closing bell, settling at 65.88. Livestock futures had a mixed day. April live cattle were 80 cents higher at $202.30 per hundredweight. March feeder cattle rose by $2.52.5, settling at $275.72.5 per hundred. The cattle inventory report came in at 86.7 million head. That's down 0.6% from last year. In addition, the calf crop was 33.5 million head, also down slightly from year-ago numbers. April lean hog futures dropped by $1.57.5 as they closed out today at $90.35 per hundredweight. Class 3 milk futures got absolutely slammed. We had March futures down 70 points at the closing bell as they ended the day at $19.31. This has been Craig Haugaard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.
It's up to us to stand up and say, enough is enough. All of this unbiblical stuff that's going on, whether it's abortion or transsexual or LGBTQ, widespread pornography, human trafficking. Bottom line, it's still up to us. If we stop investing in these corporations that are trying to destroy us, sooner or later they're going to wake up.
To learn more about biblically responsible mutual funds and ETFs, go to timothyplan.com.
Hi, this is Shana Burt, the host of Financial Issues. Financial Issues family is so blessed to have saved tens of thousands of babies, all thanks to the generous support of you, our listeners and viewers. For $140, you can sponsor 5 ultrasounds. Please go to preborn.org, that's preborn.org, or financialissues.org and click on the preborn logo. Save a baby, save a life.
Every day, kids all across America are coming to school with some kind of hidden pain.
I've seen kids come in who are just so confused about what's right and what's wrong, just having no idea that God loves them. This just breaks my heart. Crossroads has the opportunity to bring the Word of God right into the public school, to reach children right where they are.
And when we see that happen, we see God changing lives.
We want to see kids not only come to Christ, but pursue a lifelong relationship with Him. And so local churches are uniquely positioned to disciple those children as they become young adults and through their lifespan.
Crossroads comes alongside a church and provides that church with a club structure, curriculum, training, and ongoing coaching for them to run these outreaches in public schools.
If you are burdened for the children of America, consider making a donation to Crossroads Kids Club. For more information, visit reachOurschools.com. That's reachOurschools.com.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to Financial Issues, everybody. Good to see you on the program this morning. Jay from Texas, great comment. Seth, why are people afraid of getting higher prices? We've been in training for 4 years. That's exactly right, Jay. We have been. So we should be like, woohoo, ready to work those muscles to get those higher prices in. That's fun.
I know, right? You've seen Chuck Schumer complaining about the egg prices now.
That's unbelievable.
He just is paying attention all of a sudden.
Unbelievable. It's like, wow. Where were you for the last 4 years, buddy? Good golly. I know. Well, anyway, Sam, we got some interesting things to talk about, don't we, here? I'm excited for this. So in case you all didn't know, in 6 days, the largest annual sporting event in the history of the world will take place. I don't know if you knew that. There's this little football game that's going to happen this coming Sunday. Hundreds of millions of people worldwide will tune in to watch the Kansas City Chiefs take on the Philadelphia Eagles in Super Bowl 59. That is, of course, the championship game for the National Football League. Many people know this, some don't. This is one of the most popular times of the year for people to engage in sports betting. So the Super Bowl is one of the biggest. Sports betting has grown actually in leaps and bounds over the last couple years. I can't remember when it was, but it was a couple years ago where sports betting became much more widespread across the country, and you see the rise of sports betting
I think
apps.
It's around 2018, roughly.
I thought so.
I thought really started to see the boom in sports betting.
Absolutely.
It started dated with the ads for the apps, FanDuel, DraftKings,
all those
things
other
like
ones.
that.
Yeah. So, it's not something that we've discussed recently on our show, folks, but we believe that this practice, of course, as you know, is egregious. It falls under the category of gambling, and we screen against gambling in the same way that we screen against pornography and abortion. So we don't like this kind of stuff. If a company partakes in the gambling industry using shareholder dollars, even if they might not be a casino themselves, they are not biblically responsible. And so sadly, unfortunately, the Super Bowl has kind of become a petri dish for this kind of behavior. Sam, give us a couple thoughts on this practice of sports betting in the Super Bowl, both historically and what we can expect with this one coming up here as well.
Well, as you mentioned, with the absolute explosion of this stuff, it's not a surprise to learn that it's likely going to be a record betting year for the Super Bowl.
I'm sure.
In Louisiana alone, that's the state where the Super Bowl is taking place, it's expected right now that over $180 million in bets is expected to be wagered at area sports books and through betting apps in the days leading up to the Super Bowl. The American Gaming Association projected that Americans will bet a whopping $35 billion over the course of the 2024 NFL season. Last year's seasons reached $26.7 billion. So you see those numbers are just continuing to rise.
That's crazy.
Get an idea
That's a crazy amount of money.
I know, right? It's a mind-boggling amount of cash.
Yeah.
And you can imagine that many fortunes were lost with that amount of money being bet.
Sadly,
Yeah. And just to give you an idea of how widespread this is becoming in the culture, that's the money, but it's not telling you how many people are betting. A St. Bonaventure Siena research survey from early last year found 39% of Americans bet on sports in that year, and 15% say they know someone with a related gambling problem as a result.
It's sad stuff, Sam. I mean, this is not something that is just kind of hiding in a corner. This is everywhere. And if you do watch sports, by the way, the commercials have become insufferable in so many ways, but you're always seeing these different sports betting commercials everywhere. And so, it's pretty bad stuff. It's pretty stinking widespread for sure. Sam, these betting app payments, tell us a little bit about these ones. How have those numbers increased?
Yeah, so as I said, this began roughly in 2018.
Yeah.
And it's just gone nuts ever since then. So it went from $430 million in 2018. It went to $11 billion in 2023. That's just an insane growth chart, and that tracks with what we're seeing in sports. And if you watch the NFL, you can just if you've been paying any attention, you've seen how often these ads have now been showing up. It seems like every other ad is now reminding you to bet on the game that you're watching. So it's not really too much of a surprise to see that that's what's happening. And sadly, it's not limited to adults either. One survey I was looking at, it came from a high school in California. It found that 74% of students at that high school said they had placed a bet in 2024. That's despite the fact that they're underage. You're not supposed to be placing bets until you're 21. So clearly there's a problem there, and it's not clear if the apps even care or not because they're making money.
Yeah, that's real. It's like not only illegal but grossly unethical too, and just not right. So really crazy stuff. Sam, give us just to throw in a little humor here. There are some strange bets in the Super Bowl that I found kind of funny. What are some of these?
So you can imagine your traditional sports bettor, right? The people who make a living off of this type of thing. It's kind of their job. They're actually tracking trend lines and making educated guesses about these sorts of things. But that's not all the stuff that you can bet on. I was looking at some of the things you could bet on in the Super Bowl this year. One of them, you can bet on what color the Gatorade's going to be for the winning team. You can, of course, bet on the coin toss, but you can also bet on how long the national anthem is going to go for. There's an over-under on that. You can bet on whether or not one of the coaches is going to cry during the national anthem. You can bet on how long the halftime show is going to go for each song and what the guests are going to be. So this is far more than just betting on the game itself. It's getting to the point of just betting for the sake of betting.
Yeah, this is really bad. Folks, we have to laugh about some of this stuff because it is ridiculous. But the reality is this is a serious problem, and there's a reason why a gambling problem is better called a gambling addiction, like pornography is an addiction. That's what this is. I mean, you've got people looking for anything and everything to bet on in the Super Bowl. Here's the deal, folks. There can be a lot said with this, but right away, some might wonder, okay, why screen this out? It doesn't seem like as much of an egregious moral issue. Like you can say abortion is murder, so of course we screen that out. Why screen this out? Well, simply put, I'll tell you this, folks, that gambling is an act of disobedience against God. It is. It just is. It is an act of poor stewardship with the money that he has given to us to steward well. It is different from investing, okay? Gambling and investing are not the same thing. Where investing done right is wise, it's long-term, you're taking calculated risks. Gambling is foolish risk, it really is. And that's one of the big problems with it, it's wise. It's unwise. Not only is it unwise, it's also greedy. It's a form of wealth gain that the Bible forbids. It qualifies as wealth gained hastily. That's wealth gained by illicit means, also wealth gained quickly. Gambling is kind of the ultimate get-rich-quick scheme. You don't want to do any work, and you want to make a lot of money. That's kind of what it is. And from a practical standpoint, as I said earlier, gambling is simply foolish. It is simply foolish. Your money, folks, is too valuable to be put to such a risk. It's too valuable. In the same way that, think about this way, I want my son Josiah to be strong. I want him to be a strong boy, not only spiritually and emotionally, but also I want him to be physically strong too. If I put him on some kind of human growth program, I would not be a very good father, especially at 2 years old, but I would want him to get strong quickly. It's that same idea. You need to grow little by little. You need to grow your money little by little. I love my son too much to not do that to him. Or I love him too much to do that to him, so I won't do that to him. See, you should think of your money in a similar way. Obviously, it's not as important as human lives, but your money is too valuable. You've worked too hard to put it at such a risk where the reality is most of the time you will fail. Most of the time you won't win anything. And the times that you do win anything often tend to be as harmful as if you didn't win anything because it gives you kind of that invincibility feeling to want to go back and get that hit again. It really is an addiction. It really is. And there's a reason why the word gambling, I think, is rightly associated with doing foolish things. If you talk about, doing a foolish thing, people are like, oh, that's taking a gamble. Because gambling in itself is foolish. It's a definition of foolishness. Here's the deal. Christians should not gamble. Christians should not gamble. You shouldn't do it. There's a far better way to grow wealth, and it is doing it this way. It's the Lord's way. You grow it little by little. You grow it with a generous spirit. You seek to honor God with it, and you be wise with it. Gambling is none of those things. None of those things. So I believe strongly that Christians should not gamble. I believe gambling is a sin. I believe it's a moral infraction. And I believe it's right for us to screen out companies that are involved in this, and we'll continue to do so. Absolutely. So folks, this is all about being a good steward with what you have. And let me say this, in the time that we have left, I think not only should we be a good steward of our money, of course, by not gambling, but I think we should be a good steward of our time when it comes to investing emotional effort into sports teams. And I speak as a diehard Philadelphia Eagles fan to all of you. I see many of you in the chat are saying go Eagles, and I appreciate you all doing that for me. The reality is, though, that sports can become an idol. They really can. They can both become an idol in the sense of making you be involved in idleness, but more so they can become a god, a false god. And so I just think it's a good reminder for us to be a good steward of our time. It's not a sin to enjoy sports, absolutely not, but it can become really bad, absolutely can. So just something for you to think about as we've talked about all these different things with the Super Bowl coming up. Folks, we need to be good stewards. We've got to be good stewards with everything that the Lord has given to us. That's really our job on this earth in its entirety. As we honor God with what he's given us, first our lives, and then our families, and of course the gospel of most importance, but also our money, we are called to be good stewards. It's that simple. Being a good steward means being obedient. It means being obedient with what the Lord has given you. And that's what we're here to try to help you do, folks. So I hope that was encouraging for you and that you think on those things as you go about your day today. Boy, I appreciate you all joining us on the chat so much again, folks. And those of you who joined us on social media and on the radio and TV feeds as well, we're grateful for all of you. God willing, we'll do it again tomorrow. Shanna will be back. So again, make sure you get your questions in early so that you can join the conversation on financial issues. Again, the phone number is 610-363-1110, 610-363-1110. Well, God bless you all. It was great to be here with you, and Lord willing, we'll do it again tomorrow. Until then, remember, it's all His. So let's be found good and faithful stewards with what God has given to us. We'll see you tomorrow.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.